Welcome to this presentation from BREA Commercial Capital. Today, we'll explore how to secure 0% interest business credit, unlocking between $50,000 and $350,000 to scale your enterprise and build lasting wealth through real estate. This elite funding blueprint is designed specifically for entrepreneurs, startup founders, and real estate investors ready to take strategic steps toward multi-generational asset growth. The challenge many businesses face is access to capital.
Congratulations on the funding. We are thrilled to partner with you.
Thank you. We are ready to put this capital to good use.
Nearly 80% of small businesses rely solely on personal financing during startup phases, which creates a significant bottleneck. As traditional lenders tighten their underwriting standards, securing affordable, direct funding becomes increasingly difficult. This financial strain often leads to insolvency within the first 5 years, highlighting the urgent need for smarter capital solutions. Understanding 0% business credit is crucial. Unlike a one-time term loan, a business credit line acts as a revolving account, reusable as soon as balances are repaid. These lines typically require no collateral, protecting your business assets. Unlike traditional loans that accrue interest immediately on the full principal, 0% credit lines charge no interest on unused funds, preserving cash flow and providing flexible capital access exactly when needed. The power of 0% APR funding lies in 3 key benefits. First, it preserves your capital by funding essential operations without tapping personal savings. Second, it acts as a growth catalyst, enabling investments in equipment and marketing while managing cash flow fluctuations. Third, it delivers substantial savings. For example, a $100,000 line at 0% APR saves you $10,000 annually compared to a standard 10% commercial loan. Securing this funding follows a clear 5-step journey. It begins with an initial inquiry, a no-obligation review without hard credit pulls. Next, a strategy session analyzes your credit profile and structure. Then comes optimization, where targeted actions maximize approval chances. Following that, submissions are executed strategically across selected banks. Finally, capital delivery typically occurs within 2 weeks, providing timely access to funds for your business needs. Qualification hinges on core underwriting pillars. A personal credit score above 680 expedites corporate approvals. Depth of credit, demonstrated by healthy trade lines and clean repayment history, is essential. Strategic utilization, meaning low balances on personal cards, signals strong financial stewardship. Even thin credit profiles can qualify, though initial funding limits may be conservative and increase with demonstrated performance. Optimizing credit is like preparing for a mortgage. Just as homebuyers plan months ahead to secure favorable rates, business credit requires deliberate profile management. Prioritizing credit optics ensures higher approval chances and better limit tiers. Key strategies include identifying and disputing credit report errors, positioning your business entity correctly, and systematically reducing card utilization to present the strongest financial profile possible. Mastering credit utilization is critical. High utilization, such as 90% of your credit limit, severely suppresses scores and signals risk to lenders, reducing approval chances. Conversely, maintaining utilization around 20% boosts credit scores and demonstrates excellent risk management. This strategic balance is essential for institutional underwriters to view your profile favorably and unlock higher funding tiers. Funding expectations vary by credit profile. Thin credit files typically access $10,000 to $50,000, suitable for early validation and market testing. Strong credit profiles unlock $50,000 to $150,000, supporting inventory purchases and team growth. Advanced portfolios can secure up to $350,000 or more through structured credit stacking, enabling large-scale acquisitions and significant business expansion. Once secured, capital deployment options are diverse. Operational scale includes funding digital marketing, onboarding salaries, and advanced software. Inventory and growth cover bulk purchasing, machinery acquisition, and facility expansions. Real estate leverage supports bridging down payments, contractor costs, and closing expenses. This flexibility allows businesses to strategically allocate funds for maximum growth and operational efficiency. Leveraging business funding indirectly benefits personal home purchases. While business credit lines shouldn't be used directly for mortgage down payments, paying business overhead with 0% corporate cards preserves personal cash reserves. This separation improves your debt-to-income ratio, smoothing the path to residential loan approvals and enabling better personal asset acquisition strategies alongside business growth. Maximizing commercial assets involves deploying high-limit 0% capital for essential renovations and tenant improvements. Funding tenant layout changes, lobby upgrades, and maintenance without tapping into real estate equity preserves your financial flexibility. These enhancements attract Class A tenants, elevating net operating income and increasing the long-term value and profitability of your commercial properties. Upgrading retail portfolios focuses on modernizing storefronts to boost occupancy and lease values. Financing interior displays, premium digital signage, lighting, and facade updates prior to listing enhances curb appeal. These improvements create strong first impressions, directly impacting asset valuation and supporting sustained investor demand, ultimately increasing the marketability and profitability of retail properties. Accelerating multifamily return centers on value-add upgrades funded at 0% APR. Major rehabs, landscaping, lighting, parking lot repaving, and HVAC updates improve property appeal and command higher rents. These enhancements increase tenant retention and translate directly into elevated passive income, enabling scalable growth of multi-unit portfolios and strengthening long-term investment performance. Enhancing mixed-use properties requires a dual approach. Capital deployment should upgrade both ground-floor retail storefronts and upper-level residential units to balance revenue streams. Additionally, upgrading safety codes, plumbing, roofing, and aesthetics prepares the property for refinancing. These physical transformations maximize property value and position it favorably for institutional bank financing, supporting sustainable growth and profitability. Unlocking vacant land value depends on thorough site preparation. Business credit lines can fund surveys, environmental assessments, engineering plans, site design, and utility access. These soft costs transform unimproved land into development-ready parcels, attracting broader buyer interest and commanding premium prices. Strategic investment in preparation is essential to realize the full market potential of vacant land assets. An important principle to remember is that the best real estate investment decisions are driven by your personal goals and financial readiness, not by fleeting market headlines. Tailoring your strategy to your unique situation ensures sustainable success, avoiding reactive moves based on external noise. This mindset is foundational to building lasting wealth through real estate. Avoiding capital pitfalls is critical. Simultaneous submissions across multiple banks can damage credit through clustered inquiries. Using business cards that report monthly utilization on personal credit can harm scores. Neglecting optimization before applying reduces approval chances. Commingling personal and business funds complicates taxes. Operating without a clear capital exit strategy risks unsustainable debt. Awareness of these errors protects your financial standing. The wealth creation blueprint unfolds in 3 phases: First, structure and optimize by establishing your business entity and managing personal credit utilization to meet underwriting standards. Next, strategically stack capital by applying across curated lenders to build multiple 0% business credit lines. Finally, deploy this capital into operations and real estate acquisitions, generating long-term asset wealth and scaling your enterprise effectively. Key takeaways emphasize that capital is a strategic tool to elevate productivity and equity, not just a cost to mitigate. Rigorous underwriting preparation secures higher borrowing tiers. Applying without strategy undermines success. Finally, leveraging expert advisory ensures alignment with evolving standards and markets, maximizing your chances of securing optimal funding and achieving sustainable growth. Now is the time to take decisive action on your business funding. Scheduling a complimentary strategy session lets us pinpoint exactly where you stand today. Identify optimizations to maximize your limits and create a clear, personalized roadmap for your funding journey. This focused approach ensures you're not guessing but moving forward with confidence. Reach out directly through our website, email, or phone to secure your session and start unlocking your full funding potential.